replacement and the new panel that will be coming. So that's just great. Well, cheers to that. U.S. dollar looking stronger. I said today, look, we're going to just get off the bat with this. This is going to be the focus of the next, 4 years of our lives. What's the dollar going to do? The markets are going to trade back and forth based on dollar strength if Kevin Warsh is our new Fed chair. But I had said in an article over the weekend that I am willing to see how much the dollar does move on a reversion side, and that the $27 call for the UUP on the 20th is a nice little lottery play. Hey, look at us. Look at us. We have a brand new, look at that. Look at what happens when you get up at 4 o'clock in the morning because the dog keeps waking you up, and you just decide you make a change, and you do it real quickly. A lot going on. Hey, look at us. Look at us. As always, you're joining us because, these markets can move very quickly. Momentum turned negative last Wednesday afternoon. We'll talk about that momentarily. I threw the yellow flag up last week. A lot of concerns about the metal moves. A lot happening. We're going to talk about the runner, as always, at 9 o'clock. And then we're going to talk about rebound targets, stocks that are oversold. Oh, it's the fanciest of stuff. Woodchipper, I'm happy to hear that you cleaned out your portfolio. Look at us. Look at what we can do when we get up in the morning and fall right back asleep after this conversation today. All right. Hey, wow, we have a grid and everything. Holy cow, we've grown up. This is a weird time to be alive. It only took me 44 years to get this together. Our momentum strength is red. I don't think I have to make that any clearer. Got a text last night on our trader chat, Don saying, "Ooh, this doesn't look good." And I said, wow, it's almost like this signal that we built 5 years ago seems to be pretty, predictive. -20. Russell red, NASDAQ red, and that's where your pressure is going to be. Looking at futures today, does that mean that the market's going to keep moving down? No, but something was up. Iran has decided to come to the table this week. Silver selling the way that it did. Gold selling the way that it did. Copper selling off. And there's a lot that we're going to talk about this morning because, wow, wait till you get to the next slide. It just gets better. But just keep this in mind. Remember, rules for momentum, the way that we focus on identifying the equities that are under pressure. Take the number of stocks breaking out, number of stocks breaking down, and we've done. The poor man's version of this is pretty simplistic. Down 5% on the week, down on the month, beta 1 to 2, minus the number of stocks, down on the week, down on the month, same numbers, other side. X minus Y equals plus or minus. But you want to do it for every sector. That ultimately leads to our broader reading, which is our index status on the right. That's what really matters most. So we are in a little bit of a discomfort zone. Oh my gosh, look at this thing. Whew, man. It's not white anymore in the background. We got things that just pop off the screen. This is crazy. China PMI shock over the weekend, Friday. Private numbers are saying that there was growth, but this is the contraction number, and this is actually going to tell you a lot about this, copper numbers. So people asking, well, what's the relationship between copper and all these other metals? Well, this matters because, once again, China's supposed to be printing money. They're supposed to be providing stimulus, and it ain't coming through yet. Both sides of the Chinese economy are contracting, services and manufacturing. Copper's getting beaten up. This is hurting the Australian dollar. A lot of reliance, of course, on the Chinese markets. The RBA will be hiking into weakness, and Xi, this is the big news. We'll talk about this today at 3 o'clock, but China wants the yuan as a reserve currency while their economy shrinks, and there's a lot to this statement because one of the key things about why the U.S. dollar has the reserve status has a lot to do with, well, we're an open economy. You can come here, you can invest. Can't do that in China. We'll talk about the reserve debate and what that means today at 3 o'clock. Oh my gosh, I can't wait to see the colors on the next one. Woof, look at that. I am impressed. NVIDIA, OpenAI, $100 billion deal has stalled, and we wonder why. We talked about this the other day. Watch the TECS, which is the inverse ETF. Triple bear on technology stocks. That's breaking above its 20-day moving average. And the SOXS, again, institutions telling us something. This thing has been beaten up pretty badly, but this is where the speculation comes, right? If you really want to take a lottery shot, if this market really does go, then go into February, go to the 20th and look at the $20 call. It's not going to cost a lot. That becomes your lottery ticket, potentially. Big move back up to the 50. We're not there yet. We're not in this world yet where we're anticipating this dramatic sell-off, but it is clear that there are issues at hand. And the key thing that we want to hone our focus on is the bigger macro bearish trends that exist. And we're going to discuss that in a second. But this is really telling us right now that, again, Wall Street Journal reporting the discussions broke down over NVIDIA concerns about the transaction. Well, that might be a little concern of like, hey, are we spending too much money on this? You saw all of the crazy CapEx numbers that came out last week in the Microsoft report, and they said they're definitely going to invest, but nothing like the $100 billion, and that's called walking it back. How many times have we talked about this? Plus, on the other side, Microsoft getting beaten up on all that infrastructure investment. Oracle now saying they're going to raise $50 billion to keep up with the Joneses and are considering layoffs. This is scrutiny on CapEx. This is one of the major warning signs that we had for 2026, that all of that hype and optimism around infrastructure, that the conversations in the boardrooms are saying, hey, let's slow down a little bit. Let's slow down a little bit. It's a little too much right now. Now, why does that matter? Well, it matters because if we assess the markets, there are deeper issues at play. This is a company industry-wide story, but this is the plumbing of the financial system. There is a lot of risk on the table. $182 billion in equities potentially selling if the tape slips, plus about $55 billion. Commodity trading advisors in volatility control unwinding. Hedge fund leverage is on the leverage side, gross and net leverage, tilting all the way up in the 99th percentile. Insider selling, something that we watch on a regular basis. Like, we watch insider buying because it matters, but on the individual selling side, the idea of why does an executive sell their own stock, typically it's pretty quiet, right? It's largely, it could be something that they're putting their kid through college, or they're buying a fifth beach house, or a boat with their name on it, or their mistress's name on it, whatever it is. Could be anything. But when you look at the aggregate and the aggregate selling is high, that aggregate selling being high typically aligns with market tops. And we're at a 5-year high right now on insider selling, things that we have not seen happen. We have to go back and look at the tape, but thousands executives are selling, 207 buying. This is important. And then you have the volatility stress index. So single stocks are 7 times more volatile than the index. And again, this all tells us right now that people are not just dancing near the door, people are starting to walk out that door. So we have to be very defensive. And we have to recognize that this is the time that we do want to take some shots to the downside. Okay. I appreciate the tall cotton reference. All right. So new highs look calm on the surface, but underneath we're seeing pressure, and that is evident right here in our momentum numbers as well. This is all anybody wants to talk about because it's all the oxygen in the room, and that's okay. But we have a very busy week ahead of us. So it's important to note that things can change on a dime. But I did say, and I have said time and time again, that the real thing to always pay attention to is what is going on with Bitcoin. I don't view Bitcoin as an asset. I view it as a pressure valve for the financial system itself. And what I mean by that is when there is excess capital, when there is excess liquidity, we have seen since 2009 money spill into Bitcoin rather than spilling into things like, well, excessively into food prices, excessively into housing. This is kind of leading the marginal pressure of a lot of different commodity categories to not experience kind of the wild swings that we have seen in gold and silver recently. Really, Bitcoin acts as a liquidity sponge. And when liquidity drains in the financial system and there is a lack of it, Bitcoin will drop. If we look at our historical liquidity cycles dating back to 2008, there is an ebb and a flow, a cycle in terms of capital and credit availability. And when it is at a peak, well, you'd be shocked to know that Bitcoin tends to align with that. But when it is beaten up, that is where the term crypto winter actually aligns. A lot of people don't think about that. I might be the only one who stays up in the middle of the night thinking about this. But the bottom of the liquidity cycle most recently was late 2022. That corresponded with Bitcoin in the teens. And then when the cycle started to ramp back up in 2023, Bitcoin followed. Bitcoin will also experience sharp drawdowns during periods of stress like we saw in April or August of 2024 or the Silicon Valley banking crisis. And right now, Bitcoin is screaming at us that there still are broader liquidity issues. Gold remaining under pressure, the 4-decade worst day. The CMA margin hiked 8%. The China copper PMI miss is a demand fear for copper, but do not fear because, once again, as we've said, China will likely continue to provide additional support. This week we have ISM manufacturing numbers. The RBA rate decision hike is expected for the Bank of Australia. The ECB and the BOE are expected to hold this week, and we have the jobs report on Friday. Japan will have its snap election this week, and we get Palantir earnings because why not? One more thing to think about. We're going to talk about Palantir in a minute because of where it sits in its oversold territory. Last thing to add today. Yes, February is seasonally down. It is the second worst month historically. Okay. Crude. Last thing to add here. Don't drink things on air, they say. Different type of show. Bring your own drink. I will remind you that when the OILU gets into overbought levels, RSI, MFI, it's very easy to fall in love with narratives. What is the narrative of this case? The narrative was, well, Iran, we could have a war, therefore we should speculate to the upside. But for the most part, that price is priced in. Well, at least that's the term they like to toss around at us. And it could have exploded to the upside, but the reality is that the real trade, the real opportunity is the reversion off of RSI and MFI, both overbought. Go through your lists, go through your history of the XLE and the OILU, and you will find that when we are overbought, we tend to see reactions to the downside. And if news disappoints, then the moves can be very substantial. So we're pulling back today on crude prices. U.S. and Iran reportedly going to meet in Turkey this week. Ooh, very exciting. Trump saying that Iran is taking these talks seriously. The strike risk and talks, the premium has effectively dissipated. And OPEC over the weekend announcing no changes to their output in March. And obviously that's relevant. They didn't change anything the previous month when Venezuela was brought back, technically shut down all of their international markets after the arrest of Maduro. So de-escalation leads to bearish oil. Keep an eye on the XLE and the XOP. This is all happening at the exact same time that natural gas prices are sliding sharply because the storm is over. And I said this on Friday, and here I am again doing the exact same thing to myself. I said at the end of the day of Friday, natural gas prices overbought, and here we go, 17 down to 13.70. So just a reminder, when you get overbought on natural gas, take the shot to the downside. It can lead to asymmetric returns. All right. Look at it. It just keeps getting better. So many colors. GIS, SHEN, SFD, and NOMD are your runner names today. GIS, if you don't know what it is General Mills. And this is the possibility that maybe, just maybe, if we wink and cross our fingers, tap our toes just a little bit enough, maybe this is the point where consumer defensive does finally start to get its bid on the backside of the liquidity cycle. We've discussed this a little bit. We have seen the speculation on metals on the backside of our cycle at the moment. But the question now is, can we wake up on the XLP and actually start to see some of these names move higher? 5.3% on General Mills. XLP is the name that we want to be watching as a guide. The XLP has been running strong to start the year, but GIS waking up a little bit. Crossover positive on that 8-day and 20-day EMA, which is what we're looking for. At this point, we're buying in the money somewhere around the 45 level, selling at the 48 level, possibly 47.50 level into February 20th, and looking for a continuation. Not guaranteed that this is going to continue to move higher, but I would be looking for a retest of that 100-day moving average right here, 47.15. That gives you 50 cents to play with, but it also gives you some defense back here at that $46 level. Hopefully this stuff starts to wake up. SHEN is a name that a lot of people don't know too much about, but a lot of international focus and interest in what's happening in the Appalachians. Nice to own some land, nice to own some fiber optic cable, communication services, name that people don't really know too much about. Possible takeover target that is cheap. Waiting for a wake up above this 100-day moving average. We push above that moving average. That becomes your natural stop where you're buying the stock and setting a stop back here at 11.50. There is a lot of upside to Shenandoah over the long term. SFD, Smithfield Foods, consumer defensive, land play out in Utah. This is a backdoor energy play. Now, Smithfield is a nice little momentum move. This is where you just simply buy the stock and you use that 8-day EMA as your stop. Set a stop back 2%, 3%, however you want to do it, maybe even back at that 20-day EMA of 22.20. But again, consumer defensive waking up again after a relatively difficult and sideways trade since October. And then NOMD, what do? You make food. Wow, it's like there's a trend here. All the food companies are waking up a little bit. Good to see. Crossover positive here. This is something simplistic. You just go out a couple of months and just buy an in-the-money call. Keep a very low delta and make sure, forgive me, higher delta, forgive me. Keep a little bit of a higher delta here and stay in the money and look for a continuation and potential rebound here. Want to get above that 100-day and stay above that 100-day. That's going to be a key line in the sand for most of these companies moving forward. All right, here's what's getting beaten up. Expedia. Well, this is where, if momentum starts to break down, Expedia will be beaten up. And this has gotten crushed in the last couple of weeks. Consumer cyclicals, travel services, looking at continued weakness. Again, buying in the money back here, maybe 270, selling down at the 100-day, and looking for lower highs and lower lows along the way. Palo Alto and Crew CXW. Hello. Alto Ingredients. You're not Palo Alto. You're a liar. I don't know anything about this. I've seen this thing before. I wouldn't even know how to trade this, so let's pass. Terrible. CXW. I thought it was Palo Alto, but it just turned out to be is that a pet food company? Please tell me that. Corn-derived, it's freaking biofuel. Specialty alcohol. Pacific Ethanol. Government shutdown issue. Maybe. CXW. What do you do? Core Civic. Prisons. These guys are getting beaten up pretty bad. So the other one is Geo Group, and Geo has been banged up pretty bad as well. This is going to be a center of debate, obviously, on the government shutdown. And it does not look like the Republicans are going to get this across the line by themselves, so expect a lot of debate. It's not a bad short. Lower lows, Core Civic, had a nice pop in November, and now is rolling back over after that. Ugh, not good. CXW, the People's W. NVIDIA, you're in focus. What did you do? Well, we got a lot of tech earnings this week, so we're going to have a lot of conversations about this, but this is all about that $100 million, billion-dollar deal. Yeah, there's no direction here. So the key line in the sand here is actually going to be that 50-day EMA, 185.60. You want to be focusing today on volume-weighted average price, and keep in mind, hello, everybody, that we have 0 date in focus. So this is going to be the first day to really start to study how all of this works, what the focus will look like, and see how market makers behave on a lot of these big names. Keep an eye on the 8 and 20 minute, or forgive me, 8 and 20 day adjusted. So we're looking at 24 minutes and 60 minutes on this chart. That here is going to be, can't just turn it off, can I? There's no justice here. There you go. Right? We are looking for the red line to go above our green line to go above the red line. And that will take us up, and we will look for swings today. It's the first day of this. I'm looking forward to seeing what Don has to say in a couple of minutes. Robinhood, you're not doing too well, are you, fella? You're having a tough time. A tough time for the crypto guys. Same thing here. Look for some swings here. The IBIT is in focus today, right? 0 date once again. But this stuff is under pressure. How much lower can it go? Well, 75,000 seemed to be the line in the sand for Bitcoin. But we're going to look and see if there is any pressure on this. On the daily, if you're trying to go long on Robinhood at some point, well, do yourself a favor. Why don't you just wait for that green line to go back above that red line? Seems to be where a lot of technical traders are focused, and seems to be a pretty good indicator of momentum. So you see that crossover, your stop becomes, you enter above the red line, you stop at the green line. That's it. Don't do anything else. Keep an eye on the UVXY as well. UVXY is our ultra short. Focus here on volatility, waking up a little bit. I don't have the 50 and 100 up. FNGD, I do have continuing to showcase moves higher. Remember, this is a inverse leveraged fund, so the decay should be showcasing weakness, but the trend is up, which means that the pressure remains on the Mag 7 stocks. And what we will be looking for is whether or not that 20-day really continues to break lower. Everything linked to it will be in trouble. All right. 10 minutes left. Here's everything going on this week. Good grief. This is just so organized. I don't think I'll be able to top this. I think we'll have to just go back to the next thing tomorrow. Same thing from yesterday. Today, ISM construction spending, meh, whatever. Palantir earnings. Disney reported this morning. I did not see anything. I imagine it was just, are they after the bell? Trump just announced a possibility of a new stockpile, so everything is back in play. Oh, look, all this stuff woke back up again. Shocking. USAR, USAMY, all that fun stuff. What's the stuff? What's Paulson in THM? Tower Hill Mines? Yeah, it's up 10% today. Gee, it's that's funny, isn't it? Isn't it funny that Paulson bought a ton of this last week and the stock jumped 10% this morning? It's almost like he knew something. Unbelievable. Unbelievable. Insider buying. Disney, Tyson, NXPI. Tomorrow, no major reports, but the RBA announcement. We have AMD, CMG, Chipotle. I don't eat there that much anymore, so expect the stock to tank. Pepsi, jobs report on Wednesday, factory orders as well. That private report will be very critical, particularly in the wake of the announcement around Kevin Warsh. We'll have Google, we'll have ARM, we'll have ABBV. It sounds like I will be here one of the 2 days. I can give you Wednesday or Thursday. You guys tell me which one you would prefer me to focus on, Google or Amazon. I would prefer Google, largely because of the reflection of the Warren Buffett purchase and what it actually means to the market, and then how things are likely going to change under Kevin Warsh. Google is going to be a perfect example of the shift that is coming. Jobless claims as well on Thursday. Don't really care, productivity numbers, but Friday, that jobs report will cause a lot of friction, and Amazon will report on Thursday as well. Very important for the consumer side. And then we get strategy, which that should be fascinating. Get your one chair. And if you don't understand that reference, just Google Michael Saylor, one chair, and watch that video. And then once you are done hallucinating, walk out the window into the tree and just have a deep conversation with yourself. TM, PM, Bib. Philip Morris, great company. I am more of a Altria guy, but once again, I'm a long-term owner of Altria stock. Got to pay attention to Philip Morris. The headliners this week remain Google, Amazon, AMD, Eli Lilly. Big focus again on the GLP-1s. Palantir today, strategy, Disney, and ARM. The risk-off sentiment is in play. Technology remains under pressure. Silver down, Bitcoin down. Defensive sectors are leading, and that typically is common during periods of negative momentum. We are still under heavy caution for people who are trying to aggressively go long. But here's one more fun little thing for you guys to focus on today before we talk about Bitcoin. What we do right here is we have taken the relative strength index, very important. Relative strength index is a momentum oscillator. Oh, what? Yeah, okay, it's just momentum of price, okay? And this is important. Don't be shocked if Palantir rolls today ahead of earnings. Now, what it does after earnings, that's anybody's guess. But right now, the RSI, which is the price momentum technical indicator for the daily, and the money flow index, which is the price and volume, both moved into oversold at the exact same time. And that is where the sellers are exhausted. And that's typically where we see a little bit of squeezing. Oh, well, that's fascinating to see the fact that this stock bottomed out on Friday. It reports today. Markets are expecting a big probability of beating estimates today, and we're waking up. So we could see a pretty solid burn to start the day. But again, as I said, watch this 8 and this 20. If this rolls over, we could see some moves to the downside and some moves to the upside. This is a dream for broker-dealers and money makers and everybody who is selling zero date and selling speculation. Palantir is not going to have anything zero date today, I would imagine. But zero dates start today? Am I just losing my mind? You tell me. Hopefully I'm going crazy. But here's a whole list of other names. And this is typically where we do see some relief purchasing or some short covering. You've got Palantir, Intuit, Coinbase. It's a lot of the same types of things, a lot of software. Humana's under pressure. FactSet's under pressure. Trimble, Take-Two, Fidelity National. So you take this list, and then what you do is once you have this list and you're looking for a rebound in this name, do so with key moving averages, 20-day moving average to 8-day moving average, and look at the MACD. look for a positive crossover, and then look to follow trend. Trying to just get back to equilibrium on the RSI, that 50, same thing on the MFI. The MACD, combinations of these forces, these are the stocks that are really beaten up at this given moment. And if there was some policy change, some policy accommodation, something that provided relief to the markets, these are the things that people are trying to run this stuff into the ground right now. That's where you could see short-term moves, 1, 2, 3 day moves that can really, really lead to significant gains. So take this list of names, keep an eye out on them, watch that MACD each day, and see if we start to get any type of rebounds. The key thing to remember is that these are, by definition, falling knives right now. You don't want to try to bet on the reversal at the moment. If these are names that you do like, once again, as I have said, there is rationality in selling put spreads much, much lower because, once again, IVR is probably elevated, but we are in a negative momentum environment. So we would probably want to see our momentum return positive and then look to sell spreads to the downside, particularly in some of the software names or healthcare names, or even a name like Palantir. Last thing here, this ain't great, but this is reflective of broad liquidity issues and crypto crashes. This is global risk off type of environment. Now, China, its announcement, obviously, is significant. The tech sell-off that's happening on the back of the AI concerns is significant. The wild speculation and crash in metals and other associated elements is significant. But we had $1.7 billion in outflows last week. In Bitcoin, we saw big liquidations since Thursday, so people were forced to sell. Gold got smashed. There's a strong relationship between gold and Bitcoin prices. And liquidity has been tightening. We've discussed this for months. We are below and down at levels that we have not seen since April 2025, which is a reminder that, yeah, there is some deep pressure in this market right now. But it was all forecasted and it was all signaled, and we talked about it last week. We've given a lot of warnings about this. And it's not based on feelings, and it's not based on hunches. It's based on an equation. It's based on understanding capital in, capital out in the S&P 500, watching how positioning is done ahead of key events, and then learning to get out of the way. And when we see these pullbacks, we see these negative momentum events, we see Bitcoin go down. We have seen it time and time again. It happened in April. It happened in August 2024, Silicon Valley banking crisis, gilt crisis, early 2022. COVID starting in February 21st, 2020. So when you hear red, it equates with Bitcoin because that is the relationship with liquidity. Cascading liquidations is the term that you need to know. If I say it again today, make sure that you drink. Crypto longs have been wiped. The risk correlation is this is not a safe haven right now, and really it never has been. So once again, just keep an eye on this. It's going to be very critical. Again, we're looking for, thank you for letting me know that zero date starts today. All of those names are in play. Microsoft, Amazon, Apple, everyone who is tied up in this, pay very close attention to volume weighted average price, pay very close attention to the way that markets behave, particularly on the hour. It's going to be very critical to watch price movement at around 10 o'clock, 11 o'clock, 1 o'clock, and 3 o'clock. Don is coming up right now. If you are not a member of TheoTrade, I don't know what you're doing. You can get analysis like this. We give you this for free. Imagine what the paid analysis looks like. I will be back at 3 o'clock, actually 3:05. I'm going to career day for my 7-year-olds class. I'm going to lie to them and tell them that I am a barber. I hope everybody has a great trading day. I will catch up with you on the other side. Have a great day.